All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Friday, April 29th, 2022. Guys, we are just moving our way right through Q2 of 2022, man. I hope you guys are doing all right. I'm Chris Franks with Texas West Capital. Glad to have you all along here, coming at you live from yet another cloudy, overcast, rainy day in Boerne, Texas. I'll tell you what, we've been having rain most every day now for about a week. And that's been pretty great. You know, again, if you're in Texas, you know, man, sadly, a lot of times when we get rain in the spring, it's with some bad weather. But right now, the weather hasn't been terrible, at least not here. We've just been getting rain, which is great. Fills up the watersheds, gets the lakes filled up, the rivers. All those great things that we love to do here in Texas. So, really, I'm okay with that rain. I'm okay with that. How are you guys doing? Y'all doing all right? Oh, man, dollar breaking out, right? Dollar's at a 19-year high. 19 years, guys. And those of you that have been following me since last January, you know that we've been talking about it. We've been looking forward to that happening. That's been the expectation, right? And so here we are. I think there's a lot of misconception about what that means in terms of other things, though. No matter how many times I talk about it, traders, online retail traders tend to, and even a lot of professionals, they try and correlate, right? They try and say, oh, well, Bitcoin's correlated with the stock market, and if that goes down, then that goes down and all this kind of stuff. Or, they're inversely correlated to the dollar. So if the dollar rises, then they should drop. And we're going to talk about that today a little bit and kind of take a look at that and show you that maybe it's not quite what you think, right? Bitcoin itself is still kind of sitting at the lows. We're going to take a look at what may be going on there, as well as another possible triangle scenario that I've been discussing with Discord. So, a lot to talk about. Hey, listen, if you haven't joined us yet, you can do so here at howtotradetowin.com or texaswestcapital.com. If you go to texaswestcapital.com, you can just click on this green button right here, and that'll take you to our other site, howtotradetowin.com. I think we'll finally soon have it all together in one space. There's something we've been missing with the software with it, and it looks like they're beta testing this new platform I'm using, that they're beta testing this missing feature. And so if that all goes well, man, we're going to be all under the umbrella, the Texas West Capital umbrella there. Got some great stuff coming up. This is the year of a whole bunch of new stuff with us as well. Other things we're going to be launching and things we're going to be doing. We had hoped to maybe get it done end of last year. It didn't happen. So it'll definitely be happening this year, though. But you're going to start finding us, guys. Listen to this. You're going to find us and some other stuff on Amazon Prime, on Roku, on, what's the other one? I guess Amazon Prime, so Fire TV is what I'm talking about. Roku, what's the other one? I can't even think of what it is at the moment here. As well as being able to stream us from a new site that we're going to have as well, a new website. So a lot of new stuff coming out there, guys. This is really going to be an exciting time. But yeah, so we'd love to have you there at howtotradetowin.com and texaswestcapital.com. Tier 3 is where it's all at. Again, guys, this is all outdated here. Well over 200 plus hours of educational video content. We've got more content than you guys can go through in a month. I'm going to tell you that right now. And more added, every day. I don't think people really realize just how much content we put out until you're in there. And so sometimes it's a little overwhelming. If you join us, man, we'd love to have you there, even just for a month. Say hi. And then, if you feel a bit overwhelmed by how much content there is, just talk to me. Talk to Adam. We'll set you up. We'll tell you where you need to start out at and how to kind of absorb all that to kind of decide what you want to follow along with and all that kind of fun stuff. So tons of stuff there. But anyway, we would absolutely love to have you guys there, all right? We'll start off with the DXY today. Who's here already? Oscar, what's up, man? He says, given that the DXY is at the March 2020 levels, but risk assets still hold relatively well compared to March 2020 levels, do you have any 4D chess move take or historical comparison for us? Are we on the brink of dumping, but levels to the left are forgotten because of inflation? Question mark. Again, guys, I think the best way to understand it is that all these charts we look at, the dollar, the DXY here, Bitcoin, stock indexes, gold, so whatever, they're all their own charts. They're all a response to the risk levels in the market. And each one of these markets is different. So just because, say, legacy, stock markets are feeling very risk off, it doesn't mean that Bitcoin is going to feel very risk off. It might just feel somewhat risk off. You see what I'm saying? There is no strong correlation there, because what you notice is, if you guys pay attention, people talk about the correlation between the stock market and Bitcoin, for example, or the dollar and the stock market, whatever. But they only talk about it at certain times, right? Like right now, we hear it right now because it's making this new high. So it's what I talk about, whereas just as human beings, we tend to associate price action and news or whatever when it suits us. We ignore it all the other times. It's happening all the time, but we only pointing out every once in a while. So there's a lack of consistency in there, right? And I don't think a lot of people really, not just new traders, guys, but professionals as well. I don't think there's a lot of really paying attention to it. They kind of, the professionals especially, right? So they're taught. When I say professionals, I'm talking about the ones that are trading at like Goldman Sachs or something like that, right? They're front end, just trading desk types, right? Managing lots of money, millions and tens of millions and whatever dollars, right? But they're taught, they often have these master's degrees in finance, so they're taught whatever their finance professor taught them, and they just kind of accept it as truth, right? Again, news moves markets, right? The idea that things that happen on the chart then make people do other things, rather than the fact that people feel a certain way, get to a certain point, and that shows itself on the chart, right? So they're always chasing. They're always a step behind, right? And I try not to be that way. I try to be ahead. And now what does that mean? Well, it means that sometimes I'm going to be early. Because again, there's that famous quote, the stock market can stay irrational longer than you can stay liquid, right? I mean, it's very true. It is. But, at the end of the day, the smaller the time frames you're looking at, the more likely you're going to be wrong. Period. End of sentence. I don't care how long you've been doing it. Okay? But the idea is that you always zoom out to the bigger picture and try and figure out what's going on in that bigger picture. So at least you can be wrong in the right direction, You understand what I'm saying here? And so, I don't... And here's the other part of that. Again, I believe that we're on the cusp of this end of the credit market, right? We're at the popping of that credit bubble, right? And so if that's the case, then there's not going to be any previous precedents that's gonna align with it, right? Because this is a significant thing. You have recessions, which are based on different things, right? Like the dot-com bubble was something different that led to recession there than the housing market for the GFC, right? In 2008, and those things are both different than what happened in 1987, right? Black Monday, October of 87 here in the U.S. So all the recessions can often be due to specific sectors or specific things happening. But if we're talking about the end of the credit bubble, guys, we're talking about all in. It's, that's it, guys, because we are a debt-based economy. We need credit expansion to grow. This is what I've been trying to explain to you guys for the last year plus now, especially when I've gone in depth about how the banks really work, how money creation actually happens at the bank level, not at the Fed level, right? The Fed can print every dollar it wants, but if that dollar does not get out to you and me, it doesn't make it's not worth a hill of beans, right? They can print everything they want. If it's sitting in the bank, if it does not make its way through the bank and out into us, it doesn't mean anything. If it makes it out to us and we stick it back in the bank, guess what? It doesn't matter. It doesn't matter how much was printed because it's sitting in the bank. If it makes its way out to us and we use it to pay down debt, guess what? It doesn't matter the way you think it does because we are destroying those dollars. When you pay back a loan, when you pay back a credit card, when you pay back this credit, this debt, those dollars go back in. So the dollars came out, you paid off that debt, they went back in. Guess what? Those dollars are no longer out there. But this isn't an easy subject. And it's especially not easy if you have preconceived ideas of what may be happening. And so, I've attempted to tackle as much of this as possible over the last, almost 2 years, year and a half, something like that. Really made an effort to do so. And I hope some of you all are listening. I hope it's making sense maybe as it's playing out a little bit more. It's hard to let go of things that we believe to be true, right? It's hard to let go of those things that seem to make sense. Those things that everybody else says is what's going on. Everybody else says that's what's happening. Everybody else believes that, right? But the thing you need to do as a trader is to really learn about the markets. Understand what's going on. Don't just accept what's being told to you, what's being said to you. Move beyond that. Because most of what you're going to hear is wrong. It's taken me, like I said, guys, I started this journey back in 1995. So that's taken me 22 years or so now to kind of get to this point I'm at. Now, I mean, obviously I got there a little bit sooner, it hasn't taken me till today, but it took me a lot of that time just to get to this point. And I'll tell you what, whether you want to believe me or not, whether you want to, not you guys, but there's always some Yahoo out there who has names, all right? Everybody hides behind fake names and fake pictures online, and then they call you names and tell you how stupid you are, and then you're right, and then you never hear from them again, right? They don't come back. They don't come back and humble themselves. They don't come back and go, you know what? Yeah, I guess you were right. Nah. They just go off and talk smack and go off, right? Living in mama's basement, doing that thing, right? And it's very important that if you guys want to be successful traders, that you get out of that mindset, if you're in that mindset, if you are. But that's just people who have difficulty accepting change. They have difficulty accepting that maybe, they don't really know what they're talking about when it comes to trading, when it comes to markets. This is something I had to go through myself when I was younger. Thankfully, I didn't ever make a fool of myself like that. I never call people names and do all that, silly stuff. But, that seems to be what people do today. So, I think it's important that that if you really want to be a trader, I think it's so important that you let go of the nonsense, that you don't get, it's so easy to get caught up in it, but that you don't, that you leave it be. And you just go out there and you work for you and you figure it out for you. Because at the end of the day, guys, guess what? It's your money. Nobody else is responsible for what goes on your money but you. Guess what? Even if you give your money to somebody else to trade it for you, it's still your responsibility. You are still making the decision to give them the money to try, whatever they say they're going to do for you. Whether they're right, they're wrong, or otherwise, you made the decision. It's easy to go out there and go, oh man, you lost me all this money. Well, maybe their choices, ended up in you losing, money, what you had there, but it was your choice ultimately that made that possible. If you had not said, yeah, listen, I'm going to give you this money here to make me money because I don't want to learn how to do it myself because it seems too difficult to learn how to do myself. You get what you reap what you sow, right? That's what it's all about. That's life, man. That's life. Remember, I tell you guys, how you feel about life, how you approach life is often how you're going to approach the markets. So if you don't if you don't make it a habit to accept responsibility for your actions in life, you're going to find it very, very difficult, impossible even, to accept your responsibility in the markets. And the problem with that is you're never going to learn. You're never going to get better because it's always going to be somebody's fault. And as long as it's always somebody else's fault, it's not yours. So if it's not yours, then you have nothing to learn, right? You have nothing to change, right? Think about that. You absolutely have to believe that you control your own future, that you have some part that you can play in it, that you can create a future that you want if you want to be successful. You cannot believe that you are a victim. You cannot believe that the world happens to you. You have to accept that you happen to the world. If you do not accept that, you are going to have an impossible time trying to trade. It just is the way it is. Okay? Oh, sorry, I got allergies over here, guys. Anyway, just want to get that out there. Was this Trip Pop? Milker brought me here and I'm staying. Hey, man, glad to have you here. Glad to have you checking in, seriously. Nevlusian, what's going on? Hank, enjoying those days in Bali. Blaze, what's up, man? Let's see, Scott Webb is here from Melker too. Might be my favorite chart channel. I appreciate that, man. But remember, what you're going to find out if you guys really do hang around a bit, pay attention, more than the charts, pay attention to what I say. There is gold in the things I say. Most people don't pay attention to it. And so they come in, they look at some charts, and then they're gone, right? But being a good trader is about all this psychological and emotional stuff I talk about. That's what's going to make a difference of whether you're a good trader or not. Not any monkey can learn how to read the charts, guys. I mean, seriously. It's not difficult. It's really not. Now, just because I say it's not difficult doesn't mean you might that you're going to get it right all the time. You're not. We're limited in our capacity to understand the outcomes of the actions we take, right? And like I always talk about those whole decision trees. If we come up and we've got an A and a B decision and we choose A, well, we're going to go up and then we're going to have another A, B, or maybe A, B, C, right? And we choose one and we'll go up and then we have more decisions. And so this becomes this huge decision tree. We can't possibly know the outcome of every decision, right? So risk management, extremely important, all right? What's going on, Data? Good to see you. Mason is here as well. Job, hello, sir. Crypto Mowgli is here. Let's see here. Mason's saying it says the rain up to DFW. Man, I don't know. The last time it rained up in that area, Fort Worth and all that, you guys got some really cruddy weather, man. You had like tornado and whatnot. I don't want to send that up there. Oh, man. But yeah, you know what I mean about needing that rain here in Texas for sure. Let me see here. Higgs surprised us and moved to Iceland for one stream. You guys are a mess. Let me see here. Oh, Nevlusian, man, going to Spain and Portugal, man, that'll be a lot of fun. Well, keep us updated, man, and when you get a chance, let us know. Let us know how you're doing there. Dancer Eddie, what's up, buddy? Mark checking in here. Who else is over here already? Excuse me. Mason Clark says it's a boatload of content. He's talking about Tier 3 with us. He says, I've been there a year and still haven't completed everything. Yeah, there's a lot of stuff. But, again, you don't have to complete everything. You can choose those things that really interest you the most. But if you're like me and you want to be a student of the market, you want to really understand it from so many different angles and macroeconomics and global finance and stuff like that, I mean, you can do it with us. You can do it with us. I've actually got one of the things I'm working on, guys, is I'm working on educational content video series for macroeconomics and for global finance. These things I talk about often here and on Twitter and whatnot. If you guys are in with me with Discord in there, kind of like an outline, an idea, to give you a real good base understanding of really how it all works. At least as far as I understand it, which honestly has done really well for me. So yeah. The Dumpening sounds like an Amber Heard movie. Oh my gosh. Did I really just have to read that out loud? Dex, what's up, man? Corey, what's up, buddy? Hey, I appreciate you, man. Thank you so much. Thank you. Bill, what's up, bud? Been away due to oh, man. I'm so glad you're all right now, buddy. I mean, I was wondering where you've been. It's been a while since I've seen you. So glad to hear you're all right. ARM, hello, sir. Abdel, good morning. Who else do we got here? Crypto Ace. He says, is this being recorded because you are saying some gems and I missed a few things? Yes, sir. Always recorded, always available on Twitch and YouTube. And because of the issue that I had with YouTube, you guys may have remembered over a year ago, right? Where they just kind of like cut my channel just in the middle of a stream, deleted my channel. And I was off for like 5 months before I found somebody that could help me with that. Ever since then, I also record all these. So if anything like that happens again, I've got all these recordings that I can post elsewhere. So yeah. Let me see here. Skewered Trading, what's up? What are your thoughts on a bond bubble? I think a lot of things that we've come to expect the way the market to work, and have kind of held up, for decades now. I think a lot of that's going to be put on its head now. So, one of the things I like to talk about often is when Greenspan was in charge of the Fed, their big understanding of the markets was that, it had to do with low unemployment, with record low unemployment and the way in which the market moves. And then we found out that what he thought back then, we found out around 2019 or so, 2020, isn't the way it is. 2018 around then. And so I think a lot of what we know about the bond market, or what we think we know about it, I think is going to be tested. Because again, if we're looking at credit, right? I mean, we're talking about bonds. We're talking about, interest rates and credit, right, and all this kind of stuff. And so if we're at the top of this credit bubble and it's popping and and the air is getting out of it, I think it may change the way that ultimately that we think about those things. I think there's going to be a different effect on potentially on people. So again, it's like this, right? So the dollar here rallying up to 104 or whatever, right? And everybody swearing it was going to go down. It had to go down. We're going into hyperinflation because so many dollars were printed, blah, 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 right? And yet here we are not doing those things. And instead we're doing the opposite, right? The dollar is gaining strength. We are not losing strength. Hyperinflation, we are gaining strength, right? And I think this is important to kind of recognize because all these sound bites that people follow are rarely truthful, or maybe they're halfway truthful, right? I talk often about the idea of half-truths and outright lies, right? And that's a big thing in financial markets. But, when you come in, you don't know what you don't know. So I think we're going to be surprised maybe by what goes on with bonds. I think, there's a good chance that what happens is not going to necessarily be what the narrative says should happen. I really, I think there's a good possibility of that. And again, that would just be because, we're coming to, if I'm correct, and this is the end of the credit cycle, if this is the bubble popping on the credit cycle, it's going to affect all that. So, yeah. Let me see here. Chance, what's up, man? Oh, you're welcome, buddy. I'm glad I was able to help you and get that all figured out. It was taking a minute, man. Glad to have you here. Gerardo, what's up, man? He says the U.S. 10-year also broke out of a descending channel on the weekly. It's going to get interesting for a minute or two here. Yeah. But you remember, guys, we were talking about this all, Q4 last year? When we had what was it? Oh, I can't remember which one it was. It was the 10 over the 30 or something like that. We had an inverse right there. And I was telling you, watch Q1 coming in this year and we'll start seeing things really kind of heat up. And so we have been, right? With the inversions and whatnot. So, yeah, I think this is going to get pretty interesting. Sure. Let's see here. Nay, Mr. Wilkes. Thank you, sir. I appreciate you, buddy. Crypto Ace, you're welcome, man. 83 Madden, what's going on, buddy? Let me see here. Sarang, I hope I said that correctly, says, could you tell us on average how many trades you do? Oh, in a month in crypto? Just a rough number. Not as many right now. When the bull market's going, man, well, let me tell you this way. Those that have been around me, they know I tend to not keep a lot of trades open at once. I tend to concentrate on a few trades, really. So usually I might have 3 or 4 trades open at a time. So when the bull market's really kicking in, when Bitcoin's really kind of moving up, man, in a month, I can get upwards of, God, let me think here. Anywhere from 40 to 100 trades, maybe. I don't tend to do a whole lot of trading when price is going sideways, because again, even though I've been doing this for a long time, trying to nail down what kind of correction is happening can be very difficult, right? So it's a lot less, I think over the last few months, crypto wise, I think maybe I don't know if I've gotten 10 trades in a month for the last, since December or so, November maybe. I don't know that I've maybe got, but the ones that I have often are sitting on there for a while. They're a little bit longer trade. They're not really short term. Because again, it doesn't make a lot of sense to add risk that you don't have to. And those of you that follow me know that I'm very risk adverse. And, the crypto market is already pretty risky. So, yeah. When it's a bull market, it's easy. Everybody's a genius, right? It's easy to get in and ride and make money. Corrections are a lot more difficult. So I tend to really kind of concentrate, especially when crypto's correcting, more on currencies, FX market. I love the FX market. Again, that's my baby. That's where I enjoy it. That's where I spend most of my time. I'm long right now, or I'm short right now, as a matter of fact. The Aussie USD, I've got a couple of trades open. My latest one I just opened, and I opened at 0.71585. So that was about 68 pips of profit right now. And of course I just locked in a couple of Euro USD shorts there for couple of hundred pips as well. And so it's easy with FX because, as long as you're in legacy markets or you're in crypto, you generally look for the charts to go right and up, right? You look for them generally to go up, right? In legacy, or not in legacy, in FX though, I mean, it's usually multi-year ranges, but usually price moves sideways within a range. So you don't get hung up on the whole, price needs to keep going up so I can, keep making money with that. The value of the asset increases. You don't get so hung up on that. And so it makes it a lot easier to recognize when there may be tops and when there might not be. And it makes it easier to adhere to your stop losses and, and your risk management, because you don't have such a strong, overwhelming urge that it just, whatever you're trading, say it's the dollar against whatever, that it continues rising, right? So it's really great in that aspect. And so, it makes it easy to trade, and you can short it, and you can long it and feel the same about it, and, really make a lot of money as long as you pay attention and you're not really kind of stepping out there. Yeah. Boca, what's up, man? Am I short BTC? No, I'm not short BTC right now. We're about to talk about that in a minute here. So yeah. Andy says sidewave market, set up a grid bot and go on vacation. Yeah, you just gotta. It's again, people tend to get really bothered by not being in a position, but often, guys, I keep telling you, listen, this right here, most of y'all can get this without a problem. This is not a problem. You get in, you ride, you're good, right? Because the market itself is so strong, right? It's such a strong bull market, right? And then you lose it all, and usually more, in this kind of thing, or this kind of thing, right? Because again, corrections are difficult. Corrections can take many forms, and it's sad because again, as traders, most of y'all can get those longs, but then you try and trade the correction as well, and then you end up losing the money. So it's something I had to learn the hard way, coming up in the markets. And if you're around for a long enough time, you'll learn it the same way as well. You won't be you won't find yourself trading sideways markets a whole lot. Unless there's definitive opportunities, you're getting, bullish or bearish divergences and, stuff like that. SFPs, stuff like that. Let me see here. What's going on with the markets? Well, yeah, so here we go. Hey there, JWS, checking in from Houston. Oh, yeah, you're Space City, dude. Yeah, man. Hey, we got to hook up when I get over there, man. Yeah, those of you know I'm going to relocate to Houston. So, yeah, man. If you guys are in Houston, let me know. If you're in Austin and San Antonio, whatever, all those kind of areas, Dallas, and you guys want to come down, seriously, I think I'm going to start a maybe like a monthly get-together. And so if you guys are interested in that sort of thing, maybe do it on weekends where everybody's kind of free and whatnot. I think that'd be great. What's going on, Andrew? Good to see you always. So, okay, let's go ahead and start with the dollar here, and then we'll jump over to Bitcoin. So this is our chart, guys, right? And so what is this? This is actually the dollar futures. Now, you can trade dollar futures on the ICE exchange, okay? ICE. And this is what it is. And what I like about this is obviously you get your volume, because normally with your DXY, you don't get that volume profile, right? So you get it here. So if we look here, this was us way up here, December of 85. Way up here around 130 almost, right? And then July of 01, right? Right here at the dot-com bubble, right? We're up here at around 121. And we drop down. Guess what this is down here? This is the GFC, guys. This is a great financial crisis, April of 08. And we have gone up since then. The dollar has risen in value in spite of the fact that 80 or 85% of the dollars in existence have been printed during this time. I'm going to say it like I keep telling you guys every stream. Stop talking about hyperinflation, all right? It ain't happening. Of course, I can't guarantee anything, but realistically, any argument that you have for it doesn't hold water. The arguments that I've heard, the ones that everybody repeats ad nauseum, does not work, doesn't hold water, right? So we have been rallying up since the great financial crisis here in 2008 with the dollar. If we think about the market in terms of tops and whatnot, and we think about the Dow, right? So the Dow, the last real big market reversal came in 1929, Great Depression, right? Took 2.5 years to fully finish down. Took about 25 years to make a new high, right? That was 25 years, almost 30 years of bear market, guys. So here we are again. And so you have, except this top's a little bit different. It's not the same top, right? Again, you think when you think in terms of Elliott wave, you think in terms of theory of alternation, stuff like that. Although the fact that not every top is the same. And so you can actually, I've shown you guys charts from the St. Louis Fed where it shows that, for instance, people used to talk a lot about the M1 money supply, right? Or the M2 money supply. And I would like to point out that the churn, right, is not there, right? It's not like you're getting $1 and it's going to 15 different people, right? It's like $1 going to 3 different people, right? And so you look at this long-term chart from the 90s and you see that dwindling down, right? You see that volatility dropping off in spite of, right? So you can really look at that 1990 to 2000 area as being like the real start of this top that we're kind of getting in now. The top is never the highest point. It's always this thing that happens gradually, right? Almost always, but especially on the very long time frames. So everything that's leading to this top that we have in the market right now with the legacy markets, with stocks and everything, right? So November of last year is the NASDAQ Composite. January of this year was the S&P and Dow, right? And so these things are coming in, but they're a product of what's happened over the last 20, 30 years, really. The 90s into the 2000s have been a big part of that. And you can find, again, this on that information, that economic data from the St. Louis Fed site. And so, you go, oh, well, all these dollars are being printed. Yeah, well, all the dollars are being printed, but they're not moving around a lot. And so then we can talk about things like the euro market, the euro dollar market, things like that, which have an effect on all this, right? Because the dollars printed, the Fed only has real, control over the dollars that are printed that stay in the country's borders. Those that head out, those that go offshore, those that are found in other banks, what we call euro dollars, the Fed does not control. And so not only do we have demand for dollars stateside here within our own borders, but we have demand for dollars outside the border. Why? Because the dollar greases the wheels of the thing, right? Of the whole thing. It's easier to use your currency to buy dollars to buy your thing than it is often to buy that thing with your dollars. Many times that thing, that service, whatever it is not available in your currency. But the dollar has proven itself. Again, we had the kind of, in the 50s, it was the dollar and gold together. And I know you're going like, what? No, it wasn't. Yeah, it was. Look at the history. You will see that the dollar was starting to be used as a reserve currency back in the 50s. And then when we got off the, with Bretton Woods agreement there in the 70s, we got off that gold standard, it just moved on over to the dollar, right? And that's where we've been since then. And again, everybody's been romanticizing the death of the dollar since then, 40 years, guys. Which is why I kind of chuckle when everybody says all hyperinflation and the dollar's going to die and all this stuff. Because they've been doing this for 40 years, guys. I myself have been listening to this for almost 25 years, right? And it's never happened. It's always the same thing. You always see the market get to the same point, and then people start regurgitating the same thing. Nothing's changed. Nothing changes, guys. Okay? So here's where we sit. And now we get this dollar here, right? And the dollar is broken out here. This is the monthly chart. The dollar here is at 103.95. That was the high, right? The previous high was right here, 103.815. That was in January of 2017. So we are basically 5+ years. It's taken us 5+ years in this range here to break out above that, right? We are at the highest point. The dollar is the highest point. The DXY is at the highest point since 02. Let me see here. 03. Since about 03. January of 03 or so. Right up in this area here. So December of 02, January of 03. So basically 19, 20 years. We are at a dollar high here. In spite of, 10 plus years of printing more, such a huge amount of dollars, right? Here we are. So yeah, things are getting kind of interesting. If you think in terms of classical charting, this is what they call a rectangle pattern, right? It's usually a continuation pattern. So we're getting that breakout here. Often your target based on that is the previous leg up. So if we do that, that gets us up there around 136.5. The other way you can measure this is you can actually measure the height of the of this range here, this 5-year range. Whoops. And so you can use that to check as well. And so you've got a little bit lower target there at about 122.5. But in either way, it breaks out above this descending resistance. It's important, right? This resistance that we've had in place here since, 85, the end of 85. 95, 05, 15. I mean, you're talking about 37 years of resistance there, right? We could be breaking out above that. And then, of course, that swing high up there around that 129. Now, if you go back further, I think it actually goes back a bit more. Let me see here. The DXY. Because remember, this is just when dollar futures have been, able to be traded, right? So, they started being traded here back in 85. So if we look at the dollar here, zooming out to the month here, the DXY itself, right? We go back here, look at that. It was at a high back up here in February of 85, up there at around 164, right? Now, again, if we look at the dollar here, look at this. This is something I was pointing out all last year. Well, now, we found support. So you had this resistance right here, right? Which is resistance, barrel down through it. Remember, I tell you guys, if you have resistance like this where you hit up against it and pull back and then you break out straight up through like there's nothing there, you often come back and retest it as support, which is what happened here in 18, right? And then we rallied up and we hit the resistance up here and pulled back. And at this point, this is now a higher low. We pulled back to this support right here, right over here, again. Now we've broken a higher. So, we have, from down here, we have bullish market structure from March of 08, from the GFC. High, low, higher high, higher low, higher high now. We have been in a dollar bull market since 08, guys. Think about that. Think about what I just said and what I just showed you here. And then think about what you hear all the time in social media. Quite a different story, right? But this is the reality here. We've got higher highs and lows since 08. 15 years. We've had that. So, yeah. But again, significant. And remember, right here, this comes off this monthly. This was something else I pointed out, was that we had this hidden bullish divergence here at January of 01 lows there. I told you back then, that's pretty significant. That's a multi-year hidden bullish divergence here from January of 18 until January of 21. 3 years in the making, right? Let me get that breakout higher there. So I don't think the dollar's going to stop anytime soon. I could be wrong, but it seems to me that we're probably going to get a pullback sooner rather than later, but it's just going to stay local. I think it should stay above this kind of 97 area here, right? I think this high volume node, the highest one is over here down around 80. Pretty close second is this one up here around 97. I think when we pull back toward that area maybe, and then we just kind of rally up and through that, and we break out through that descending resistance there. We'll go through that. So what does that mean for, again, the other thing we look at is we're breaking out through the resistance up here on not significant volume. That's what I'm trying to point out right here. Look at how low this volume is comparatively to this range, right? The big volume in this range came, first of all, on this rally up and drop down and bounce back up, right? That month long is that spike in volume. After that, it's this right here. So you had supply trying to come in and it sent it down here, and then you had it trying to come in here and it pushed it back a little bit, but then there was no follow through lower. There was no lower low. Supply tested and got taken out, and demand just steamrolled over and continued to steamroll higher. So, again, not a lot of significance in supply up here, like you would expect if this was a distribution, right? There's a little bit. I mean, there's some volume up here last 3 months as we've continued to go from basically the EQ of the range to the top of the range. Supply has come in like you would expect it to. Demand has continued to steamroll. Look at the size of this monthly candle. Look at this. So it's not enough just where does supply come in the range. We always talk about that. But beyond that, it becomes, okay, but does it follow through? Because we followed through here, but not below the swing low. Rallied up here, right, with this big volume on this spike up here. Kind of hit this area, so you would expect, right, this whole area right here. You expect to get rejected. We sent down. But guess what? Again, higher low. So we get rejected here, higher low. Push up, get rejected here. In this area, we've got another higher low. Breaks out. And now this is rallied up, not just above here, but also above here. No follow through with supply. So demand is significant. So again, we look at that, but this doesn't mean that, that because it breaks out there, for instance, that Bitcoin needs to reverse, right? So let's show you another chart here. This is one I posted on my Twitter. If you guys are following me there, TX West Capital. So this shows Bitcoin here, right here, right? And then I believe this top one, yeah, that's, whoops, hit the wrong one there. This is the DXY here, right? Since 2015. So people are scared because the dollar's rallying up here that Bitcoin has to drop, right? But that isn't the case. Macro-wise, we have just created this large range here, right? Where prices, where the DXY, where the dollar has gone sideways, and Bitcoin has continued to rally throughout it all, right? Well, this right here. You've got this move right here, this big move up, right? This was significant. This was December of 18 to June of 2019, right? What happened with the dollar here? Let me see, right here. We continued to rally. And then we pulled back here, same way we pulled back here. Now, yes, that went down and that went up, sure, but look what's happened here. We're going up, right? What's going on with Bitcoin? Just sideways. Just sideways. Right? So, again, I don't think that necessarily that just because the dollar's breaking out that Bitcoin has to drop and fall, right? I can see the scenario where the dollar pulls back, say, I've got this as a 1, 2, and this is 3 playing out here, right? So it can pull back in wave 4, and Bitcoin can rally during that time, right? I can see that sort of thing happening. This has been a long move up. This has been 15 months of higher. Even if we go from right here, it's been just, a year of higher, basically. And so we should expect a multi-month pullback coming up sooner rather than later, at the time when Bitcoin may be completing a triangle. So let's talk about Bitcoin. So let me get to the bigger picture here, and then we'll look at the smaller one. So Bitcoin, we're looking at this idea that maybe wave 3 is done here. Maybe we've got this triangle, A, B, C, W, X, Y for D, and then E, right? But the other thing that I've been discussing with Discord this week is the possibility that maybe, what if this is what's going on here? What if this is what's going on? What if this triangle we had, this is a WXY, And what if that finishes wave D right there at the weekly pivot? And then this pullback, we're printing a wedge right now, right? A descending wedge into support here, right? In this high volume node here. What if that ABC or that WXY is wave E? Now, it's not orthodox because, again, you've got this nice large A, B, and C, and then a smaller D and a smaller E. So not necessarily orthodox in the way that it's printing, but still possibly correct. Still, there's nothing wrong with it, right? I mean, it still definitely could be fine. So what would throw off? I talk with Tier 3 members. I talked with them about what does it mean? You hear often the market, you hear retail talking about maximum pain, right? And often when they talk about max pain, they talk about money lost, right? They think, man, so the max pain would be getting everybody excited and then dumping on them so they lose money. But I don't think so. I've been doing this for a long time, and I think, to me, max pain is about what people miss out on. Not in what they have or what they're losing, but what they actually miss out on. It's the unknown. Okay? So follow me with this. If you're in a trade here, let's say you go long here and it dumps on you and it's coming back against you, right? You are taking that loss. You are physically taking that loss. You're experiencing it, right? And that's pretty bad, right? It's pretty bad. But think about it this way. If we get up here, let's say we're right here, right? And price reverses and heads up. What are you guys thinking? You're thinking dead cat bounce, right? You're thinking, oh, it's going to get rejected the pivot. And if it breaks through there, oh, it's going to get rejected before the swing high, right? I mean, to me, that's what you think because that's what everybody else on social media is talking about, right? The pain comes in the fact that you're thinking of that, so you're scared to enter. And you watch price continue to rally without you. And in your head, you're trying to justify. You're trying to say, it's okay. It's going to turn back. It's going to turn back. And price continues to rally without you. And so that pain comes from the unknown. From this internal fight within you about that unknown. It is painful to watch something play out that you're watching and you're going, man, yeah, it looks like it could continue going up, but you're too scared to do it. Pain comes from the fear of not taking a position, of not jumping out there in there and doing it. And I believe that is a lot more painful psychologically than actually being in a position where you're losing the money. Because if you're in that position where you're losing the money, you can cut that at any time. You're already in it. You're already losing it. You're in it. You're happening. But for us as human beings, most of our fear comes from the unknown. If we think about fear, right? And fear is the greatest driver of human decisions, right? It's not greed, it's fear, right? Fear of missing out, FOMO, right? Things like that. So if you are fighting yourself as price is rallying and you're thinking, man, yeah, what if that's the bottom? I should get in. But then the other side of you goes, no, that's got to be it's got to go lower. I've got to get into 30s or 20s. Yeah, I got to get that. And then that's what everybody else is saying, so that's what's going to happen. And then it keeps rallying. And you keep saying, well, man, God, I hope I'm right. And then next thing you know, it breaks out above the swing high, the all-time high here, and then you finally get in. But you've missed a 50% or a 100% rally off here, right? You've missed a 100% rally by the time you finally decide to get in there. That pain as it continues to rally there and you are unable, you're frozen, you can't seem to make that decision to get in. That, to me, that's the max pain. That's what I believe, in my years of doing this, that's what I believe is the max pain. So, when people are talking about that, I think it's important that we look at that. Now, what's going on here with Bitcoin? Well, so we were looking at the possibility. I've been telling Discord, I said, listen, no matter what the counts are, no matter what you're looking at, the reality is you have to get above this right here, this 40,817. As long as you're not above that, prepare for lower. Now, I've left this potential bullish count on in case it breaks out a heads up, but I've told them, listen, it's very possible that we've got this A and B, and then this is 1 and 2 of C coming down here, okay? So what do we need? Well, we need a rally back out really above the swing higher. Above wave B is really where we need it. If we can get above wave B, that's going to hint that that wave X here is probably done. Then we need to get above. Man, this thing keeps changing on me. I don't know why. It changed to 43,000 this morning. Now it's back up to 43,109.50 basically. So I'm going to set it back up there. But basically, it's this level. Once you get through this level, this wave circle X at 109 there and a half. Once you get above that, I got 190. I put the wrong one on there. 43,109.50. There we go. Once you get above that, that's your first real big clue that, okay, maybe that bottoms in. So you get a hint on a breakout above wave B here, but your first real clue comes on a breakout above wave circle X here. And your third level that you're watching at that point then is this swing high up here. This wave circle C swing high up here at around 48,240. Those are the really three levels that you need to watch. Now, if we break down below this swing low here, we'll look for an initial target of the ascending channel support. We break down through that. We've got 35,968 and 33,613. Those are the 6 levels, 3 above, 3 below, that I think you really need to watch with all of that, okay? Until it breaks down below here, it's possible this is a leading diagonal with a 1, and then we're getting a 2 printing here. You have the 15-minute pivot almost perfectly at the 78.6 retracement at 38,262. So I had this at a DXY because we had this low here. But now that we're breaking down about it, it would be an ABC. 1, 2, 3, 4, 5. So there's a leading diagonal there. And then a B. And then 1, 2, 3, 4, 5 kind of coming down here maybe. Okay? I think that's the way it's going to have to be if it's going to be. So we'll look for some breaking up here, right? The 15-minute S1 pivot right there at the 78.6. So we're going to look for an impulsive breakout above the 15-minute pivot at 38,953 or so. If we can get an impulsive breakout above that, that'll be that first kind of clue that maybe wave 2 is going to be complete. But then we need to break out above wave B here at 39,926.80 to add confidence to the count and say, okay, maybe wave 3 is heading on up here. It'll be a little bit below here. It'll probably be closer to around 42,675 or so. So, even though this count is on here, I'm not telling you this is what I think is going to happen. I'm saying that as long as we're above this swing low, this count is valid. But we're also possibly watching the idea that we've got 1 and 2 of wave C, Y, X in progress here. But we got to get below that swing low to say that that's what's going on. So again, we are just sideways, guys. So either break out above or break down below. That's what we're looking at. Okay? Eldo, yes, you have to manage your emotions. It's hard to do. It is hard, guys, because we are emotional by nature. It's hard to do. It is difficult. But the good thing is the more that you do it, the more you practice it, the less difficult it becomes. Okay? Yeah, Gerardo says that the euro-dollar market is so much bigger than the domestic U.S. dollar market. Yeah. People misunderstand that. They do, because they don't even have a clue about the euro-dollar market. When they talk about dollars, they just think, okay, what is the Fed printing? What are we looking at here stateside? They don't even know that a euro-dollar market really exists, or what it is, or how it impacts everything. So yeah, it is quite significant for sure. Do I like the weekly channel from April 21 to November 21? Testing the bottom of it now. From April 21 to, I'm going to have to say what you're talking about here. April 21. April 21. So you're talking about up here at the top? Until, what'd you say, November 21? Let me see what you're looking at here. Is that this one? Nope. November 21. Where is your November 21? Oh, you mean the range here. Oh, I see what you're doing. You're drawing this like this. You're drawing it like, daggum it. All right, let me get rid of this here. Let me try again. You're talking about this channel right here. But you said we're testing the bottom of it right now. The bottom of it's down here. This is April 21. This is November 21. Unless you're drawing it from somewhere else. Where would you be drawing it from? I'm to be honest, I don't really know what channel you're looking at. I mean, those are the dates you gave me. And the lows are down here, testing the bottom way down here. So I'm really not sure what you're trying to get me to look at there. Obviously, I'm not drawing the channel to what you're talking about. So yeah. Oh, you're not talking about? No, I wouldn't look at a regular channel. I wouldn't look at a weekly channel. Weekly closes? Why would you skip the wicks? There's so much information in the wicks. Why would you skip those? Let me see here. Let's go weekly. So you're talking about closes. So you're talking about this here to this here. Even that, we're still not at the bottom. Unless, again, you're talking about, as somebody was mentioning there, you're talking about arithmetic chart right here. And so my question on this is, why would you use an arithmetic chart when you have a range of, well, let's see here. Why would you use an arithmetic chart when you have a range of what is that, $40,500? With such a significant range, why would you use a arithmetic chart? You shouldn't be. Because it doesn't give you a realistic look at where price action is. Remember, when we go to buy or sell, guys, or let's say we go to buy, we go long, right? And we're looking to make 10%. If price is at $1,000 when we buy and we're looking to make 10%, we're looking to make $100, right? But if we buy at $10,000, then 10% is $1,000. If we buy at $40,000, 10% is $4,000. We're not looking at $100 each time. We're looking at 10%. So a logarithmic chart is more realistic in how our brains actually perceive what's going on. So I would never use an arithmetic chart on a very large time frame like that because it skews. It's not realistic in the way that we look at it. We're not looking to make... Remember, arithmetic chart means we're looking to make $100, not 10%. Right? The view it gives us. So yeah, so I don't really think about that channel at all, no. No, not at all. What I do look at right now is this Bollinger Band is tightening here. And we're sitting right below this right here, this median. So if we bust out above that median, which sits right around 42,000 or so right now, 42,100, somewhere right around there. If we break out and pulse V above that, we should be looking to target the Bollinger Band resistance up here around 49.5. So I'm more interested in that if that's the case. I'm also interested in this overall range right here. Right? Where most of your volume is showing up here at the lows, right? Suggesting that there's stronger accumulation going on than distribution, right? Look at your highs up here. Highs up here are down here. It drops here, demand shows up. Drops to the low here, demand shows up. Drops to the low here, demand shows up. You get toward the tops, it drops off. There's not a lot of significant selling going at these tops here. But there's significant buying going down at the lows. You know, as you look at this, whenever it dips down there, look at how that volume picks up. Demand is prevalent all throughout the range here. Overall, range is the volume's dying off, right? Or you can even say dying off through here, and then potentially going to pick up through here. So if we get that move up, you should see volume continuing to expand. You can see right here on the weekly, that we have a little bit more volume this week than last week. But we still have through Sunday, right? So we still have time there to kind of go through it. Something else that was interesting to me, look at this. I'll show you something. So I talk about range, right? So this is the highest volume range in this 15 months of sideways, right? This is where the market is most interested in price. Kind of like this. I just drew it kind of quick here, a little bit larger, but basically this orange range right here, right? Provides resistance along the way, support, resistance, support here, right? Now, on top of that, we have this huge volume spike here on a doji at the bottom of this rally down, of this decline here. So I'm interested in what happens here because this suggests that demand is really showing up like significantly. So do we get follow through higher here? That's what I'm interested in. Right now, if we want to look at locally there, this is the 3-day chart. We're also just about bottomed out and oversold on the 3-day, right? So this has got one more day left in it, and this candle will be closed. So let's say the bottom is at or near here. Let's say that maybe this is correct here, right? That maybe the count's correct. Maybe the bottom's in. Maybe we're just pulling back in a wave 2, right? And we're trying to catch some, right here at the 70.5, trying to catch a bid. But, again, probably looking further down to 78.6. Or heck, we could even come into the down into the real lows here where we've got this demand in these wicks, right? So, but what if this is 1-2? What I would expect to see by the end of this week, by, when the week closes on Sunday, is I would expect to see this rolling back up here, and at least where you've got a smaller doji within this larger doji range here. And if I see that, I'm thinking we're probably breaking out and heading higher. And if this is D and this is E, this is just going to have a lot of naysayers out there. Dead cat bounce, it's going to come back down, blah, blah, blah. And like I explained earlier, maximum pain, right? As it rallies on up here above that all-time high. I think it's going to do a lot of damage to people psychologically. So, yeah. Is this a potential redistribution phase on Bitcoin at your triangle C point? This right here, it shouldn't be. If this is wave C of the triangle, then wave E cannot drop below it. So if this were to be redistribution, it would have to drop below it. Right? Is it possible that maybe we've got ABC here for A, ABC for B, and maybe this is A, B, and we get a C here for C? Like maybe C's not done yet? I think that's a possibility, but wave C would have to end prior to wave A here at 28,800 on Coinbase. But yeah, I could maybe see this be an A and a B and just a small C coming down. Stays above wave A. We need a breakdown below that 28.8 to kind of say, okay, the triangle is not valid. Until that point, again, could even be A, B, C is C here. Or C and then W, X, Y for D and then E. Or like I have it here, A, B, C, D, E. So there's different ways to do it. And this is what happens when price pushes sideways, right? That gives you more opportunities, gives you more options. Which again is why it's so hard to trade corrections. Okay? So yeah. But I think, yeah. So the question was, are we preparing for a spring here? So I think you mean a drop down below this support here. Sure, we could see that potentially. We could see that. It would just have to, again, get up prior to wave C swing low down here at 32,933 and 33 cents on Coinbase. It would have to stay above that and then rally back up. But if this is a triangle printing here, guys, no matter how I said it, whether it's this one or the one we're originally looking for, or C here and then D and then E or whatever, when it's done, you should expect some strong, persistent movement higher. This has been 15 months so far of just consolidation. That's a long time to consolidate. And remember, the longer that you consolidate, the longer you go sideways, the stronger and larger the move out of that range is going to be. So yeah. Mason says, but if the DXY continues to rally, the possibility is going to be very low for a strength shown in Bitcoin, right? No, I talked about that earlier. If the DXY I think should be nearing completion of wave 3. I think it's got maybe a little bit higher to go, but I think overall it should be just about there. And if it's just about there, then we should have potentially a multi-month pullback for wave 4. Because wave 3 has taken, remember the idea is we got a 1, 2, and potentially a 3 up here. In that case, you've got this rally up here from about June of last year. So that's, 6, 4, 10, going on 11 months. We should have a couple of month pullback. And that couple of month pullback, especially with Bitcoin potentially printing a triangle here, having a strong rally up and out through that gives it time to rally on up through. But, that whole pullback with the DXY rally with Bitcoin, could coincide. It doesn't have to, as I showed earlier. There isn't necessarily on the macro framework. There isn't really this idea that, the dollar goes up and Bitcoin goes down. Sometimes it does, sometimes it doesn't. And if it doesn't all the time, then to me, it's not worth paying attention to. And why would that be? Because I don't think that people are trading Bitcoin based on the dollar. They're trading it based on whether the market is risk off or risk on, which is all the DXY is doing. But they're all different markets. So the relativeness of that risk on or risk off is dependent on the market. Right? So yeah. So we'll see here. We'll see, okay? Let me see what you guys are saying here. Oh, Andy, you think it's manipulated the dollar because 50% has been printed last year and the DXY is moving? Yeah, but again, is moving. Yeah, no. That's just, that's just a misunderstanding of how things work. That's a lack of understanding of how, just because the Fed prints it doesn't mean that it's all out in circulation, all doing it. And even that comes out in circulation, that ends up in the bank or that ends up paying off debt, this is all disinflationary at least, if not deflationary. Right? Because you're not using those dollars to chase after the same products, all of it, right? Using a lot of it to pay off debt, which we know has been paid off huge over the last few years. It's something we've tracked, right? And so when you pay off debt, the dollars are destroyed. So, you have that. But, the dollars that are out there, guess what, guys? The Fed's going to be releasing treasuries and mortgage-backed securities into the market. Guess where all that excess dollars are going to go? Pristine capital. Treasuries. People want those things. They work like cash. They work like dollars. In the global market. So yeah, they're very important for companies and countries and whatnot to hold. Large trading firms, hedge funds, stuff like that. It's very important for them to hold. And we talked about the repo market and everything that was going on with treasuries and the repo market, the reverse repo market here over the last year plus, right? So yeah. There's a lot of inner workings going on. Just because the Fed prints a dollar does not mean that dollar automatically chases goods and services. It chases some, may not chase others. Goes to pay off debt, sits in the bank, buys treasuries and mortgage-backed securities. And all those things, affect what's going on with the dollar. So no, it's not manipulated. It's just the way it is. Just because the Fed prints a dollar does not mean that the dollar's value, goes down versus other currencies. This is something we talked about over the last year plus. ECB is the biggest contributor to the dollar's value, and the ECB continues to be dovish. They're finally talking about maybe a first rate hike in Q3, Q4 this year. Bank of Japan. Bank of Japan is at a 50-plus year low. Longest losing, well, I say low, longest losing streak in 50-plus years. Yeah, that's the second biggest contributor to DXY. Almost 58% for the euro, almost 14% for the yen. So your euro USD and your USD yen make up about 72% of the weighted value of the DXY. And they're both dovish like a mother right now. So yeah. Compared to them, the dollar is heaven basically, with the Fed being so hawkish. If you need a narrative. So yeah. Let me see here. Mason, I appreciate you, man. Sure. What do I think about modern monetary theory? I think, okay, so modern monetary theory describes a framework, okay? Think of it this way. It describes a framework in which the system operates, right? And so I think as a framework, it's not sustainable. I don't think you can create credit forever. And that, again, that goes to what I'm looking at now, which is the idea that maybe this credit bubble has burst, right? So modern monetary theory works within the confines of it, right? It's, again, it MMT defines a way, it defines a system, right? It seeks to explain how dollars and debt and everything work within its system. But just because it explains it doesn't mean that its system is sustainable over an infinite period of time. Does that make sense? I think when people think about MMT, they think about, oh, something forever and this is whatever. But no, it's correct in what it explains within its boundaries, within its system. But that doesn't mean that its system is sustainable. Again, we look at the top of the credit bubble and the way all that goes. So yeah, I think that's probably the best 40-mile view of it, the best way to kind of really just take a big understanding of it. Because people seem to think, oh, you can't, you either believe in the MMT or you don't, as far as whether it works or not. Well, all systems work within their systems, right? But is that system really sustainable? That's the question. And that's a question nobody asks. That's a question nobody answers. But that's the one that makes the most, there's the most importance as far as I'm concerned. All right, guys, let's jump over and look at a few charts. A few more charts here. Let's see. Oil has been on a bit of a rally. Where are we here with oil? All right. So as I said here, oil's been on a bit of a rally. So we've had to adjust the count a bit. We've got this rally up here to the daily pivot, and that may have completed. So I've got this as a 1, 2, 1, 2, and then 1, 2. It's a deep 2 here. So it's questionable. It's questionable. This could still be just wave 2 printing here and head up further. If it breaks out above this 109.20, I think there's probably a good chance it targets this kind of supply up here around this 113 area. But again, that would just be then A, B, A and then B and then C up here heading up there. If we drop down through the channel EQ, we're going to look for a target of the channel support. We break down impulsively through that, and we're going to look down for a breakdown through 99.80. If we get that breakdown through 99.80 from where we're at here, then that keeps this count alive, and it gives us a wave 3 down here at minimum expected wave 3 target down here. Yeah, right there around 85.80 or so, if it does that. But overall, again, I still believe this is the top up here. I believe that's done. and we're heading lower overall. So yeah, that's kind of what I'm looking at the moment. Is oil breaking out of a triangle here? Could be possible. I mean, just on the general structure, we'd have to make these ABCs here, though. Right here. And I'm not sure that they really fit ABCs. They seemed more clear to me to be 5. This is the only one I think maybe we can get an ABC out of it if we don't look at this as a 1, 2, 3, 4, 5. But if that's an ABC, then again, we're looking at this being, 1 down here and then ABC, or, maybe 5 up and then 3 down and then 5 more up here to finish off. So yeah. I think if you want to think of this as a triangle here, then you'd have to break out minimally. You have to at least break out above this 116.64 here. But if this was a triangle, this would be wave 4, and we just have the one further move up, and that would be it. And then we'd definitely be headed down, because triangles only happen in your impulses. They only happen in wave 4 as wave 4, or they happen as wave B of 4 or wave B of 2, or wave X of those. Yeah, but the entire one itself would be a wave 4. So that would have to be what that is if it was. So yeah, I mean, that's what we got to be looking at there. Based on the height of this triangle, if this were to be a triangle, we'd have a pattern target of just barely above the swing high there. We'd just be looking to get around 132, 133. Based on the height here. Now it could still go up higher than that, but just pattern target wise, based on the height of this triangle. So yeah. Let me see here. If we look at, natural gas, again, I know a lot of you guys living over there in the UK and the Eurozone area and whatever, and so natural gas prices are just killing you guys over there. I know that. And they're going to keep killing you, I think, for a bit longer. We're getting a good rally off this low here. We broke out above wave X, so we should be on wave 5 of 3. 5 of 3, guys. Right up there around 9.346 is where I'm looking at, minimum expected target. But, again, that would be 3. We get a 4 on the pullback, and then we get a 5, and then we'd be done. You get a nice large pullback after that, where you see prices really kind of come down. But I think right now we've still got some more pain for you guys, unfortunately, with that. Silver. Again, looking at precious metals. Silver continues to drop. It's about to break down. So, again, still looking at it being... potentially a wave circle 3 target down here at around $18.99. So that's 1, 2, 1, 2, 3 down there. 3 of 3. So again, we're getting down there doing that. I mean, we're looking at sub 10, probably sub 8, maybe somewhere in the 7s for silver. Same thing I've been talking about for quite a while now. Gold. A similar kind of path. So here we go again. The idea being that we're in this, except for this here. Let me kind of zoom this out a little bit. There we go. Much larger 1, 2, 1, 2, and then 1, 2 here. Looking for the breakdown below support right here. Support resistance. Remember, pattern-wise, there's the possibility that we've got a double top here. And so a breakdown below this swing low here gives you that pattern target right around $1,340. Get you right into this high volume node here. But again, if silver's heading down there toward that, 8 area or whatever, gold is likely headed down below 1,000. So that would really upset some people. Heck, it just coming down here is going to upset a lot of people. But, again, guys, if you think about it, if you believe that Gold's going to go up because because of inflation and whatever. And you see the dollar rallying like it is. I mean, it doesn't make a whole lot of sense that at this point that gold continues higher, right? We have all this. Think about it, guys. Think about your narratives. We have all this persistent inflation, right? These 40-year highs in inflation, right? What's gold done? What has gold done? It's dropping here, right? It's dropped here since March, right? In spite of these record high inflation numbers, right? Maybe gold isn't a hedge against inflation. Something I've discussed with you guys before, right? Yeah. So, again, guys, a lot of things that that you often hear, general financial stuff, gold hedge against inflation, all these things, they're often just sound bites that don't, most of the time have a lot of truth to them. If we jump here at the NASDAQ composite, continues to break down here. So it opened, it gapped down at the open, rallied back up to close, and then continued to fall. I've got a wave 3 minimum expected target at 12,017.85, and then a wave circle 3 minimum expected target 11,427.75. So once we break down below 12,468.28, that should signal that those are in play. Give you added confidence to them right there. But again, tech heavy, right? I think Amazon missed yesterday, right? So Amazon's one of the big heavy hitters there. Along with things like Tesla and Microsoft and Facebook and all those ones, and none of it's really doing all that great, right? This is your S&P E-minis. So your S&P, as you can see, continuing to break down here, just now breaking below that swing low. We're looking for it between below 41.57 to kind of signal that, hey, we've got wave 3 down here at 38.97.75, potentially coming down there. And so, again, remember, the S&P is also kind of tech heavy, but nowhere near like the NASDAQ, okay? NASDAQ is just this huge tech thing. S&P is scaled back a bit, not quite as much tech, but it's still heavy tech. And then you have the Dow, which is a much more broad-based, right, index. It's not just tech heavy in it, right? So here we are. Looks like we've got wave 2 complete here. Break down below this swing low at 33,248.46. That's going to be wave B. Break down below that says wave 3 is on point here. Minimum expected target of 32,149. Wave parentheses 3 has a minimum expected target of 30,544.5. Again, still headed down. Nothing showing any reason why we think it should continue to head up at the moment. So we'll continue to look lower with it. What is gold then? Gold's a pretty rock. Gold's a pretty rock, and it's useful in things. Useful in catalytic converters. Stuff like that. So, it has a use. People like to put it on and feel pretty. That's what it is. It's tradable, just like anything else. That's the way I view it. I've talked about this at length multiple times over the last few years. To me, gold is just something that's tradable. I don't see any reason to hold on to it forever and ever and ever. I think you sell at the highs, you buy at the lows. You sold in 2011, you bought back in 15, 16, 17 in that area. Sold again, recently, as we were at one of those 2 double top area there, potential double top areas. There's still the possibility until it breaks down below that swing low that I told you for the double top. Until it breaks down below there, it's possible this is still wave 4 on gold, and it has wave 5 to go up to like 2,300, 23 and some change. But if it does that, then it hits that, and then it's coming down for a while. Again, it's still pulling back. 1,600 or something probably from there. So yeah, I think it's just something that you trade. So yeah. Anyway, guys, so that'll do it. Those are the charts. Those are things we're kind of looking at. Again, I am still short with my latest Aussie USD trade. I'm short at 0.71585. Lost a few pips here locally. It's just kind of, it had a good drop this morning, like I said, almost 70 pips. We're getting a little bit of a reactionary bounce, but I believe that it should continue lower. I believe so. But I will cut this. I have no intention of cutting this unless it hits my entry. This is one of the ones I think we're headed lower, so I'm going to keep it going. And the only reason I'm going to close it out is if it actually hits my entry, and then I'll get out of it. But I think we've got lower on it. Because if it hits my entry, then the odds are, that it may be bottomed out a bit more, a higher degree time frame than what I'm looking at, and so it'll probably head up a bit higher. So yeah, that's what I'm looking at there. Okay. All right, guys, listen, that's it. I appreciate you guys showing up as always. We'd love to have you with us over there at howtotradetowin.com or texaswestcapital.com. You can click on that green little button message thing on the at the top of the screen there, right? But again, even if you do it just for a month, guys, just be ready. Just be ready to soak up everything you can. Otherwise, you're going to waste your money. We're not cheap, guys, but I firmly believe we're well worth it. Again, helping you navigate the half-truths and the outright lies that are out there. Not trying to force you into trading a certain way. Helping you understand the way the market really works and what's going on with it. And then exposing you to the correct way to trade all these different ways. The correct way to trade Elliott wave. The correct way to trade Wyckoff. The correct way to trade supply and demand. And indicators and how to use it all together and really kind of either develop your own style or find a style that really fits you, something that you look at and you go, man, that makes sense, that I understand that instinctively. And then, there to answer questions and help you kind of develop yourself with it. By the way, we do this thing now every month for Tier 3. We've got a little entry thing that we do now. We've done it last month and we're doing it this month. So it's going to be something we'll do pretty consistently. If you're in Tier 3, again, I teach you a whole bunch of different ways to trade. And if you use those ways and you're making money doing it, you can enter. And what you're basically doing is just showing us a screenshot of your entry and exit. I don't care how much money you're trading. I don't care if it's $10 or if it's $1,000 or if it's $100,000. I don't care. I just want to know that you're using real money, using what I'm teaching you, and you're making it work. And every time, every winning trade, enter. It gives you more entries into it. And we're giving away, a free month of Tier 3 every month for our Tier 3 members with that. So, yeah, a lot of fun. And I get to see that you guys are really applying these things. I get to see that you guys are really serious about this. Because I go through here, guys, and I teach you all day, every day. But ultimately, it's up to you to make the decision to get out there and to try it and to practice it and to, do the things that you're learning. Okay? I hope you guys have an amazing week. I will be back on Friday at 11 a.m. Central Standard Time. But no, I won't. This is Friday. I hope you guys have an amazing weekend. Look at that. I'll be back on Tuesday at 11 a.m. Central Standard Time. But yeah, if I don't see you before then, hopefully I'll see you guys. I will see you before then, hopefully, in Discord. And like I said, if you join, man, send a DM, say hi in the chat channels, man. We've got an amazing group of traders in there. We are not what you guys may think of like some kind of signals group kind of thing, like what you see online all the time. I pride myself in what we do is a lot more different. We teach you to really, really trade, guys, and be successful. But again, at the end of the day, you've got to be open-minded enough to accept that maybe you don't understand what's going on and maybe there's a better way to do it and maybe you can actually be successful. All right? You guys take care. Thanks for joining in. As always, remember the only thing you control in the market is how much you lose. That's it, guys. That's it. So risk management is absolutely the most important thing you're ever going to do as a trader. It's the most important thing you do daily as a trader. Y'all take care.